Hello everyone, this is Own Wall Street with thetradersperspective.com. I'm taking a look at the US dollar, and right in front of you you have the daily time frame. Just kind of taking a look at things here, and you can see that we've, again, as I've previously identified, been in this big wedge pattern, and price has been bouncing back and forth, and now we're coming close to this 200 period simple moving average, as I indicated earlier in the week, which was, I believe, Saturday. I posted that video analysis, and I was looking for prices to go down to this 200 period simple moving average on the daily time frame. And let me zoom in for you. Right around this area here is what I was looking at, but right now we have the dollar kind of just popping up, and if I zoom back in on the 4-hour time frame, you can see that we've actually had a new downtrend line that the US dollar has been following since my moving averages had performed a bearish cross here, and price on the 4-hour time frame has now pulled below this 200 period simple moving average and this 50 period. You could see that price has just continued to just flow down and broke below this important key level of 100, and now headed back down towards about 99.40, and we caught some little bounce here. But again, I really don't see the dollar making any substantial upside move. I'll show you why. Going to this weekly time frame, you can really see that the dollar has just been kind of being liquidated as we've quietly entered a risk-off trade. I mean, I don't see any reason why the US dollar wouldn't come back down to about 98.50 to this weekly uptrend line, as well as this 50 period simple moving average, which does, play a role as far as how price either bounces or, stays below it, or above it, excuse me. So to make the job easier here, I like to refer back to the monthly time frame. And it is April 19th. We are approaching, the end of the month here. And if you look at what kind of a candlestick we're dealing with, you can see there's liquidation occurring. Now, again, the key is, are we going to be able to hold this 98.60 level, 98.70 level? That's going to be the major key for the US dollar, because if we break below it, then we could see a whole new situation set up where we have, as I've been thinking, is a controlled bear market for the US dollar. We're not there yet. I'm just seeing hints of it right now. But what I am seeing is this continued selling pressure in the US dollar. We've had weak economic data that's been kind of making people think twice about when the next rate hike will come. To me personally, it doesn't really matter when the rate hike comes, because it's actually serving as the trigger to slow down the economy, because things are not as good as they would love you to believe them to be. So what am I looking for from the US dollar? I got a couple things on my radar here. So I have this downtrend line here, and I have my moving average here acting as resistance. It does a pretty good job of holding prices in when prices are below it, and a good job of holding prices when it's below prices. It acts as support. So what I'm looking at right now is to see if the US dollar can get above this 99.80 level, and then more importantly get above this downtrend line here. So I would expect that we could possibly see a test of 100, but I do have a bearish bias as far as what the charts are showing me to, at minimum, go to this 200 period simple moving average. And looking at this candlestick setup, I would not be surprised if we went back down and finished the week towards the lows. So that's what I'm kind of expecting. I will do an updated video on Saturday, probably earlier in the day, as I have a wedding to go to. But stop by, subscribe to the channel. I'm calling for the US dollar to see possibly a little bit more upside, and then finish off the week lower towards this 200 period simple moving average, or kind of bottom out here near 98.70. This is Own Wall Street with thetradersperspective.com. Thank you for watching. Have a wonderful evening.